If you're looking for investment opportunities with huge upside potential, then you'll want to check out Cathie Wood's 5 picks. Wood is the founder of ARK Invest, and she made a name for herself by picking some of the most successful tech stocks in recent years. And her latest picks are no different. She's identified 5 companies that she believes have the potential to generate returns of over 700%. So if you're looking to make serious money, then you need to watch this video. Hey guys, welcome to Investor Facts, where you may learn about investing and how to make the best financial decisions for your life. Make sure you click the subscription button and enable the notification bell if you haven't already. Share, like, and comment. The task of investing does not have to be difficult. With the proper research and due diligence, anyone can become a successful investor. And I think I've got a very decent track record when it comes to uncovering those undervalued treasures with huge upside possibilities. I'll give you a quick summary of each businesses and explain why Wood thinks they offer such significant potential upside. Therefore, let's begin. I think Wood's analysis of these 5 investment prospects is insightful because the ARK Invest team actively investigates its big ideas and distills the result for us. It was an effective instrument. The mentioned technology is missing one key component though. But the success as an investor may depend on this one factor alone. Don't panic. I'll let you know which of the following 5 concepts I think makes the best investment right now. Yet, I hope after reading this, you'll better be able to decide for yourself. These price predictions weren't provided by Wood though, in a vacuum. The investing thesis that accompanied each price objective, on the other hand, is what investors should pay closer attention to. Zoom's 2026 price objective is $1,500 per share. Zoom's member group may potentially triple or even grow over the next 3 to 4 years, according to ARK Invest. It also thinks that its annual income per user might treble or even increase. The business will have higher profit margins as a result of this exponential top-liner expansion. Additionally, if the stock's value stays in line with its current level, this will all lead to stockholders receiving life-changing rewards. I anticipated that Zoom's R&D spending will eventually pay off with rekindlable sales growth from a foundation of devoted enterprise clients. I already stated that I don't anticipate $1,500 per share. But for now, market-beating gains over the long run are probable. That being said, before deciding to purchase Zoom shares for yourself, you should look at the evidence against mine. By 2026, Roku expects its share price to reach $605. The number of active Roku accounts could triple or more over the next 3 to 4 years. Additionally, these Roku consumers will receive more videos than they do at the moment. With such a sizable and highly engaged user base, the platform will be able to demand greater advertising rates, which will enormously increase revenue. Similar to Zoom, ARK Invest thinks that this revenue growth would boost Roku's profit margins and drive up the price of the stock. By 2030, the price of 1 Bitcoin is to be set at $1 million. Bitcoin's market cap is modest when compared to asset types like property investment, gold, and stocks. According to Wood, a number of catalysts will cause this to change, including all the ones that follow. More people will utilize as a form of value storage. More nations will keep Bitcoin in their treasuries. More significant businesses will include it on their balance sheets. And more common people will use it as money, a medium of exchange in financial transactions. But all of these needs to be contributed to each coin's value reaching $1 million. By 2025, the block price target is $5,000 per share. ARK Invest believes that there is a phenomenal secular trend underway in which people are abandoning the banking sector in favor of fintech services such as Block. The investment firm thinks Block's cash up will be the one of the key factors influencing Block's growth over the coming several years. In addition to forecasting a significant increase in the number of active cash up users, it also thinks Block will monetize consumers more quickly Despite the fact that ARK Invest sees extra potential in its Square and cryptocurrency ecosystem, this would be the main factor influencing shareholders' returns. By 2026, Tesla's target price will be $4,600 per share. According to ARK Invest, Tesla will have an order of magnitude 10 times more yearly sales of electric cars by 2026 than it had in 2021. Furthermore, it projects that the business will make more than $100 billion from its future ride-sharing network alone. Due to this size, its gross margin will quadruple over the following few years, enabling increased profitability and significantly higher share price. Wood might be mistaken in a lot of these hypotheses. So now, let's get to the point. Long-term investing is predicated on value investing like the one described above. It is based on actual happenings in the world, not on the lines on a chart. When investing in stocks, you should be able to articulate what you think will happen and how it will increase the value of your investment. ARK Invest does that without a doubt. My first suggestion would be to toss aside the price goals associated with each Wood's investment thesis for any investor wanting to gain information from them. Begin by looking at the fundamental tenets of Wall Street's opinions. A fair amount of negativity, what might go wrong, mostly lacking from the 5 investment theses mentioned above. In order to be a well-balanced investor, you must cultivate the fundamental characteristics. You need to develop the ability to weigh both sides of an issue. For instance, only a portion of ARK Invest's Roku investment thesis is currently correct. The number of active accounts at the corporation increased by 16% year over year to 65.4 million in the third quarter of 2022. As a result, it's getting supporters like ARK Invest. Another aspect of investing thesis is that streaming hours per active user increased in Q3. Unfortunately, Roku's profit margin hasn't been growing significantly, and there are reasons to believe that the current downward trend may continue. The company's hardware products are more expensive to produce than what it can charge for them. Additionally, in Q3, Roku announced the introduction of Roku Smart Home, which would usher in a broad range of hardware products that will be offered at a discount, potentially affecting sales. The approximately 1,000% upside suggested by ARK Invest's target price may be dampened by this lack of profitability. Similar to that, I think it might be overly optimistic to expect Tesla to generate more than $100 billion in sales from a market that doesn't yet exist. This essential part would almost certainly drop to ARK Invest's target stock price of $4,600 if it doesn't launch soon. So, although I hold 4 of these concepts, I could ultimately find flaws in ARK Invest's investment theses for all 5 of them. Nevertheless, I respect Wood's and others' viewpoints since they constantly offer a different angle. Even so, it's still wise to consider both sides of an issue before coming to your own conclusions. Never let someone else's price target by driving force behind your purchase. If you don't do any additional research before making an investment, always think about what might turn out well and what could go wrong. I hope you find this helpful, and I encourage you to do your own research on the companies before making any decisions. Thanks for watching the entire clip. If you like it, kindly let us know by hitting the like and subscribe buttons. Also, don't forget to enable the notification bell so you can be the first to know when we post a new video. In the following video, I'll see you. Goodbye.